This Twin Peaks Investing podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Is the 13th of May, and for those of you watching on YouTube, you can see we've got a fantastic guest with us. That individual is Sam Bell. I'm going to give him a full and thorough
introduction or grilling?
Introduction. I'm looking for the right word and I didn't come up with any words. Introduction later on, folks. I'm here with my good co-host Henry Viola here. You can find him at HT Viola on Twitter, and you can find Sam Bell at _SamDB on Twitter/X. So as I was saying, it's the 13th of May. We've had a good few weeks of good weather in the UK. Sam's not in the UK. For those of you who can see him, the light's going on and off where Sam is because there's power problems where he is. We'll tell you where he is in a minute. But Henry and I are in the UK. I'm in Leicestershire as normal, and Henry's in London somewhere abouts. Where are you abouts? Henry, Wimbledon-ish area?
I am near Wimbledon, yeah.
Near Wimbledon.
Centre of the universe. Yeah. We've almost discovered stable internet here.
Absolutely. Yeah. I was going to say that's where Paddington's from, but Paddington's from Paddington, isn't he? Or is he from Wimbledon?
Oh, jeez. Yeah, no, Paddington's not from Wimbledon.
That's a joke, Henry. That's a joke. You missed it completely. Right, ladies and gents, the markets. Yeah, we've had a deal. The UK's had a deal, made a deal with Mr. Trump, President Trump. Markets have gone very, very cheery. This conversation is being had also with regards to whether or not we can get UK pension funds to invest more into UK stocks. And there's even a threat from Rachel Reeves, the Chancellor, saying there's even the possibility of make it mandatory, mandating pension funds to invest in UK equities, which I do not agree with. I think if we're in a situation where we're mandating pension funds to do that, there could be massive withdrawdowns, outflows, and potential chaos and underperformance. I'm not sure what you think of that, Henry, regarding what's been said.
I'm not a huge fan. I mean, the jingoistic flag-waving bit of me goes, yes, rule Britannia and all the rest of it. The slightly more sensible investing side of me goes, this is going to end really badly. I can't think of a single instance in history where capital controls have worked well. They usually, like you say, cause massive investor panic, huge market ructions. You've already got several of the signatories of the Mansion House Accord starting to backtrack and going, we don't want more to do with this. You need to think about this more. It's not just as simple as bashing people over the head and going, give us your money.
Agreed. Any thoughts on that, Sam, before we give you a proper introduction, mate?
Probably the same as you, Peter. You know, Henry, you just said, you know, it's great as an idea, the concept, you know, that more is going to be put into UK equities, which is going to improve all our portfolios, one would hope. But yeah, as you say, capital controls, just not the way to go. Mandating this stuff is not the way to go. We just need to make the equity markets more attractive. That's the way to go about it, really. And there's plenty of levers to be pulled there that we've not touched. So that would have been my preferred route.
Agreed, mate. Agreed. Right, before we get into more policies, I got told off for embarking on a chat about politics and other things on a previous podcast, so we'll curtail it there. We'll share some feedback, Henry. The squirrels went viral, mate. Your conversations and analogies regarding all manner of ramping and exploiting social media went viral regarding your analogy of squirrels. We'll start firstly with our good friend Roger Green, who was the first off the mark, and he said, listen to this pod box fresh on the M1 this morning and thoroughly enjoyed it. A surprising number of squirrels featured, and he was very worried about Mr. Squirrel, one of our listeners and followers on Twitter. His Twitter handle is @WorkingMyBarrow. Mr. Squirrel is. And he said, Mr. Squirrel should definitely not listen. I understand that no squirrels were harmed in the making of this podcast. Smiley face. Thank you for that, Roger, and thank you for listening again, mate. Thank you for your feedback and the graphics that you sent through as well. Loved that. We had Paul Edenbrow via YouTube. He said, another great podcast, chaps. Really great work as always. I certainly recognise some of the story stocks you mentioned. Remember them being ramped. Excellent advice once again to everyone on the importance of doing your own research. A super shout on FDM at 46 minutes. Henry, from a fundamental perspective, this one ticks a lot of boxes for the types of companies I like to invest in. I will certainly be investigating this further. But on face value, there is one red flag I see, the chart. I would really like to see an upturn in momentum before considering pulling the lever. I know that there is a slight upturn in the simple moving averages recently, so perhaps the momentum is just starting. I will watch with interest. Thank you, chaps. That's on Paul. So that's another shout there for FDM, your pick there, Henry. And another call as well regarding FDM from James at James 1 N1 on Blue Sky. Interesting to see Nearpod cover FDM, as I've been nibbling over the course of this week to establish an initial position. Believe it should be near/close to lows now. No dilution despite 80% plus share price falls. And then we had another investor called One Guy Trading, and he said, FDM ticks my boxes, no doubt. Having worked there, I would urge caution, as they were in the FTSE 250 but were demoted. They are a recruitment company like any other who would have struggled in the past couple of years, hence the price internally. They have let a lot of people go. So I asked One Guy Trading, do you think there is a possibility they could face further revenue margin pressure in H2 2025 or 26 plus a dividends cut? To which he replied, I think so. They mainly recruit graduates, train them up, and then place them with clients. They used to have good quality trainers, but they too were also let go this time last year. Now graduates simply are placed in front of a computer to self-study. That could be lower quality going forward. And of course, I've got to give a massive shout out to @TraderMark72, and he wrote, a great and entertaining listen. HT Viola, when is your IPO? Take my money. And that was all about Henry potentially listing his Squirrels Limited company with a fantastic graphic that Mark had shared with us. Any comments, Henry, about all this squirrel malarkey and IPOs and graphics? Anything you want to share?
Well, I'm working on an IPO imminently, ladies and gents. I'll have you know I've been chasing around Wimbledon Common with a large net trying to catch the first batch of squirrels. So keep your eyes peeled for listing details soon. I hear the London Stock Exchange is desperate for new companies to list, so I feel the time may soon be ripe.
They are. Sam, did you listen to the Squirrel pod that we had? We
No,
renamed the pod this week, but we didn't.
I've been away for a few weeks, so I'm trying to do as much work as I can. But the markets as well have been busy. So between running multiple companies and trading, sorry I missed that one.
No worries, mate. We'll get onto all the busyness that you've been onto in a minute. I'm going to share one more feedback here. This is from a brand new listener, by the sounds of it. Rob at RobDay 806690068. I loved the podcast, gents. A great listen. I've known about them for quite a few months, but only started listening to them recently. Great informative chat. Very interesting listening to your chat with Annabelle Brodie-Smith too. I'm a hooked listener now. Smiley face. Can't ask more than that, can you?
Splendid stuff.
Into our corner now.
I see what you did there. Splendid stuff.
Excellent. Right. We've been chatting and nibbling around all this stuff now. Let's get to our guest, ladies and gents. We have got Sam Bell, serial entrepreneur, multi-business owner, investor, trader, and generally a decent guy. That's why we've got him on here.
That's very kind of you.
ladies and gents decide whether he's a decent guy after Henry and I speak to him and ask him a few questions about his background and journey. Welcome, Sam. How you doing, fella?
Yeah, not bad at all. As I mentioned, I've been travelling for a few weeks, so that's a real background. It's actually pitch black outside. I can see the sun streaming through Henry's window. So, yeah.
So you have to explain where you are in the world.
Oh
so
yeah,
we're
of
traveling,
course.
but we're
That would
today.
help. Yeah.
Yeah.
So in the office in Cape Town, got a few staff out here, so come out for a few months to kind of get the office up and running a bit more solidly here. So we've had contractors,
Town,
but
like
we've made
that's a tiny little Regent office or backturn office in London. Cape Town in
South Africa, of course. Yeah.
South Africa, folks.
Yeah. And it's quite a tech hub actually. The number of people, I'm using a co-working space here. Number of people that are in similar businesses. Probably 90% of the people here. So it's a good place
looks
to
very
be.
high
Really
tech behind
it.
you. I mean, you've got light bulbs and everything going on. Very impressive.
I know. Well, they've got a decent government in this province, so you get less load shedding. Yeah, other places in the country, you're lucky if you get 5-6 hours of electricity a day. So, which obviously makes life tough.
It does.
Yeah.
Right, Sam. Let's start from the top here, mate. I've got a few questions,
Right.
and then Henry's going to ask you a couple of bits and pieces. But I'm going to try and get through as many of these questions I've got in front of me as possible. Right, I'm going to start with career and background and what you're doing now, but go back, right, as to your first sort of inclinations and studies as well. What did you do? What did you study? What did you want to be when you were a kid? When you were as young as Henry, what did you want to do?
Do you know what? I don't remember particularly wanting to do anything, which is, I guess, why I fell into what I ended up doing. Didn't go to uni because I'd already started my business. The only thing really in school I was that good at and enjoyed was all the languages, French, German, Spanish, those kind of things. So still love all of that. But yeah, I'd never got the opportunity to go to university because at 16 I'd already started my first business. Another that I started at 18, I'm still running to this day, and that's 20 years later. So yeah, I wouldn't call it a varied career. It's literally my entire life doing the same thing. But yeah, it's been really interesting because to I suppose informed listeners, main business of the one I mentioned, been doing for 20 years. We build websites for publicly listed firms and for large asset managers. So they tend to be the guys managing usually tens of billions, not even billions, tens of billions of assets under management. So I think it's got to be where the interest in trading and investing came from, right? You get to work all day, every day with these.
Are you allowed to do a bit of name dropping for us, Sam?
Yeah, I guess why not? So the first one years ago, they're still going, was Jerry Hembro. We work with big funds like Impax Asset Management, Pantheon Investment, they're 250 listed. Also work with some small caps, which are equally interesting. Did some nice work with Greatland Gold the other week. Great company, great management. So it's good. Yeah, it's great. Like day to day, you get to be immersed in all of this stuff, and then obviously that informs your own investing and trading. Not to say I only buy, the stocks of clients we work with or anything of the sort. Sometimes the opposite, but yeah, when you see fund managers, Richard Staveley is another one of our clients, and you watch some of these guys and how they execute, and a bit of inspiration there, and of course that starts to what's the word? Not affect, but you can learn from what they're doing. Just general chats with some of these people. Yeah,
That's
incredibly.
Yeah. Sorry, I was going to say
the main business is Copia. Is that Copia you're talking about? That does that website stuff.
Yes, yeah. Sorry, that's the name of that one, Copia.
Yeah.
So say 20 years doing that, but about 4 or 5 years into doing that. So we're in that crossover world between tech and financial markets, capital markets. A few years into doing that, being in the tech space, I was at a meetup in a pub. Discussing a particular programming language that we used for building people's websites. and they wanted to get an event off the ground about this programming language. So as I mentioned, it was in a pub, so they said, would anyone like to help out with this? I'd had a couple of beers, so my hand shot up and said, yeah, of course, I'll help you get this event up and running. And yeah, 15 years later, I'm the last man standing. So I turn that into yet another business, and we run 3 fairly large tech conferences every year, you know, likes of Google, Bloomberg, BBC. They either sponsor, speak, or they send their entire development teams to come and learn. So yeah, another really interesting business to be in. And then I guess I shouldn't neglect mentioning Ticker as well, which is a bit of a fledgling startup project, but where we work with all this financial data, so stock data, regulatory news. We've got all the redistribution licenses from the London Stock Exchange, because of course we need them for building our client websites, right? They want to show their RNS, they want to show their share price. So we thought, we've got all these licenses, let's start building a product around it. So, you know, you can go to ticker.app now if anyone watching, and you can read the RNS there. And yeah, some really big plans with that, especially with how fast AI is moving. Yeah, but you know, I would really scratching my own itch. You know, I want to be able to bring up the RNS in the morning and without, you know, being lazy. And it just says down a panel down the side, this is ahead, this is behind, this is what the CEO said last time. You know, to have all that context there while you're reading it. So that's coming down the pipeline over the next few months.
Brilliant, brilliant. Sorry, Henry, you had an earlier question. You want to go back?
Yeah, no, we've moved on. No, that's a really interesting idea about the RNSs actually, and it's interesting you should say that, because I was having a conversation with one of our audience members about that exact issue. So you get the official RNSs that come out, and if you use a platform like ShareScope, you can see the RNSs through that. You could go to the London Stock Exchange and download them and see them in their original form. You can get the press releases and read a journalist's opinion on them, or you can get a commentator's opinion. But it's so hard to find a reliable source that will keep a log of, this is what we're saying today, this is what we said 6 months ago, this is what we said a year ago. And actually using a bit of AI to go and trawl a couple of previous RNSs and start to build a framework, hugely, hugely valuable intelligence in my opinion.
Yeah, so I mean, that's my dream. And with AI, as I mentioned, it's a hell of a lot easier than it was even 6 months ago. But yeah, as well, hopefully no one from RNS is watching, but you know, to replace the system eventually, or to get RNS to replace the system, because you know, in this day and age, to release an RNS, the company's downloading a Word document template, they're filling it out. All right, maybe their PR team, compliance team looks over it, and then that gets uploaded, turned into HTML that looks like it's from the 1990s. Really, all of this stuff should be data-driven nowadays, right? So, you know, they should be putting the NAV figure, the profit figure, whatever it is that's, you know, going into that release. We shouldn't be reverse engineering it with AI and so on. You know, it should be nice, clean data. So, got some plans along that concept as well for Ticker.
Lovely.
Cool. So, Sam, you mentioned that you were exposed and you had individuals that are involved in the market. So you're early on, you know, doing your first business. And with the asset managers and all the rest of it, was that your first introduction then to investing? And if so, what sort of age are you talking about?
Yeah, it really was. For the first few years, I didn't start investing and trading. So trying to go back now. So 2005, I think it was. Yes, it's 20 years this year. 2005.
Wow.
I'd been around 18, and I cringe when I think about it. Probably had a briefcase like the guy from In Between as well, you know, going into this big £10 billion asset manager and somehow convincing them to let me build their website, their reporting functions, all the charts and so on.
That's scary.
But they said yes, and here we are. But yeah, it wasn't, I think 2008. Yeah, I know it was 2008 when I started. Yeah, because the first stock was Barclays. I remember buying it, not knowing, you know, bought it on Friday afternoon, not knowing if it would open on Monday morning or not. So, yeah, that probably gives you an insight into my trading style.
Why Barclays, and why did you just go? I'm going for Barclays. What were you thinking?
it was in the news a lot because it was, it was the what they call it, the financial crash of 2008.
Yeah.
And yeah, there was, real discussion in the press, on the bulletin boards, are these banks going to survive? But of course, the concept too big to fail had been bandied about. Some people didn't believe that, banks were going to be bailed out. Yeah, I think a double-digit percentage over the weekend just from holding this. Obviously, it was a big gamble as well. It wouldn't have been a huge amount of money back then. My first investment, my first trade, but yeah.
So let me ask you this, right? So Friday afternoon, you've read something, you've heard the bulletin, all the noise around, are they too big to fail? The share price has been cratering, right? You buy it on the Friday afternoon in the hope that by Monday there's some good news around the markets or around Barclays. How long did you keep the share for to get a double-digit return?
Less than 24 hours, I think. It was. I got a
sold
shot of
Monday,
it by Monday. Yeah.
Wow. Baptism of fire, mate.
Yeah.
Catching a falling knife, as they call it. But yeah.
Yeah. Well, I've got plenty of examples that went the opposite way. So.
Yeah. Cool. Any questions regarding that, Henry? His little briefcase at 18 going, hello, mister, can I fix your website for you? That's nuts, isn't it?
It shows great entrepreneurial spirit. I mean, I think the first job I had at 18, I did door-to-door sales. I worked in a warehouse for a while. It would never have occurred to me to have a go at messing up someone's website. Probably a good thing, really, because otherwise, who knows what would have happened with the banking system.
Yeah, there would have been a financial crash, mate, a double-digit one. Right, so that's your first intro. That's your first stock. Barclays. Yeah. Right. There's an aspect about you regarding trading as well. You've already mentioned it. You're in, you're out. That was your first, let me just go in there very quickly. So when did the trading aspect start, or is that it? The beginnings of a bit of trading, a bit of investing.
Well, if you make 10% in 24 hours, that's going to get you hooked pretty fast.
Endorphin kick.
Yeah, I mean, I guess it aligns with, running businesses and doing it from such an early age. There's a certain element of risk taking if you're an entrepreneur. You can't really run a business and sleep well every night. You've got to take a few risks, otherwise you never get anywhere. Obviously calculated, and that really was what took me a while to learn. To this day I still do silly trades that, in hindsight, even 5 minutes after clicking the button, you think, why did I do that? But also, the returns that you can get, I was going to say from small caps, but even large caps nowadays, with Trump and trade wars and the like. There's returns to be made. So there's got to be an element of thinking you know better than the market, which is obviously dangerous. But everyone's got to have an edge, and try and think of something recent. So Marks and Spencer's, maybe I'm probably going to upset some of your audience now, because this is a short position I'm holding. But a week or so ago, I thought, well, why is this thing sounds terrible? It must be terrible for their business. With 3 weeks on now, they're still not taking orders online. There's Reddit forums where you can see inside what the staff are saying, things like that. So I just thought, why is this so strong, this stock? So probably best performing trade of the last few weeks would be short on Marks. So not something I do loads and loads of. I don't have a bias towards it. But if you think something's mispriced and you want to take advantage of it, I've personally not got any issue with shorting something.
Yeah, I think some people have got a big problem with people shorting stocks, and I don't see anything wrong with it. I think if it's, especially when it's an activist or somebody sees there's something not quite right regarding the company, then and they're able to take advantage of that. Equally, when they see something positive about a stock, they buy it, or they do a leverage play on it, to go along on it.
Yeah.
So it balances the markets out, I think. I'm not sure if anybody agrees or not. But I don't have an issue with.
Yeah, I mean, I've not got a problem with shorting at all. It provides an essential market service, in my opinion, because there are companies out there that are absolute dross. We talked about a couple on the last episode of the podcast. And if you've got no mechanism for identifying these and betting against them, the only thing you can do is go long. And actually, I think shorters do play quite a crucial part of identifying these companies where things are going wrong and pointing out risks. I mean, the Marks and Spencers thing is quite opportunistic, and I don't mean that in a derogatory way, but you've done sort of the first step of shorting. Here's a bad headline, the share price will respond. Then imagine it's something, in theory, slightly less, slightly more nefarious. So the Marks and Spencers thing, through no fault of their own, they've had a cyber attack. Right? They should be able to do something about that. The company should recover. Now imagine they were committing accounting fraud and you'd uncovered that and no one else had uncovered it, and that was why you were shorting them. And there's lots of shorters out there that specialise in that sort of activity. There's a firm, Muddy Waters. Is it Muddy Waters? Carson.
Yeah.
Carson
Block. Yeah, that's the fella.
Yeah.
And they produce these absolutely fascinating shorting reports where they go through. If you sit and read them, and it's sort of, we've looked at the top 1,000 customers, and of the top 1,000 customers this company says they've got, 800 of them don't have a website. Of the 200 that do have a website, there's nothing on the website. Of the 300 payments that are overdue by 90 days or more, 50% have gone into receivership according to Companies House, so they're never going to get those debts paid. And they're uncovering some incredible stuff through forensic analysis and desktop research that I think gets completely lost in a lot of equity analysis when you're just looking at a flashy website and going, oh, that looks nice, I'll put some money in it.
Indeed, mate. I think this is the beauty of what Sam was saying about the Reddit boards and other sources of getting information. Sometimes you've got people actually working in the company, as well as we had with the earlier person that gave that feedback. They're on the floor, or they've been in the company, or they're not working there, but they've got family that are working there. And having that primary bit of research is absolutely priceless, isn't it?
Yeah, if I think back to one of the talking over you there. Think back to one of the comments on this Reddit board, for example. On Friday afternoon, people were kind of confident that there might be some good news over the weekend, and then one of the staff said, "No, we've just received this new shipment of labels because we've got to do everything manually. So we're fairly sure that it's going to be at least 2-3 weeks minimum before the electronic systems are up and running again." So you can, if you do your research, there's sources out there to find out what's going on the ground. Obviously, a lot easier with a retail company like this, where it's a high street brand. A little bit more difficult if you're investing in a miner in the middle of Mongolia or something. There's not really as many boots on the ground to give you that info. But yeah, certainly with high street names, there's some easy trades out there.
Absolutely agree, mate. I've got to go back to what you were talking about there about stocks to avoid, Henry. And we had at Gallon 73, and he mentioned, love the new stocks to avoid section. We've all heard the ramping, and it's nice to see them smacked down. Reminds me to stick to elephants with ROCE with Roche. So I think we might have to do a regular sort of every now and then stocks to avoid section. I've actually got one that I'm going to talk about.
I've got one as well.
But given what I said on the last pod about Anzard, and you actually made that a stock to avoid, so there you go.
This is a quick hello to you, our valued Twin Peaks Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe, and you'll always be the first to get the new episodes. Thank you for your continued support.
I've not looked at what the share price has done since our last episode. I'm hoping that's not gone up.
I'm not even going to think about it, mate. We'll have to do that on the next pod.
Sorry, did you say Hansard?
Hansard,
yeah. HSD. What's it done in the past 2 weeks, mate? Have you got something there you can look at?
I can only say positive stuff about that one. They're a client. So.
Oh, no.
Oh, dear.
Don't listen to the last podcast.
We'll have to speak about that off air, mate. We'll have to speak that out on there. Right, so you've covered the investing, the trading side of it, Sam. When you're investing, what do you invest in? Is it small caps, large caps? Are you all over the shop, or are you looking for information for opportunities? Where do you go with your investing
Yeah, I
property?
mean, it is quite varied. So always a risk of, buying and selling too many things and needing to sit on your hands. So that's, I guess, in a way, that's why I do the bit of trading as well. So got my ISAs, for me and for the missus. Stuff in there I tend to be keeping for months, if not years. And I think the trading probably is like my equivalent of sitting on my hands to make sure I don't fiddle too much with those other
With
portfolios.
the primary accounts. Yeah.
Yeah,
Yeah.
that's it.
So that's why the
So,
trading.
and that could be
the trading
anything.
flips.
Yeah, and there's some good. It's only the last few years I've really looked at funds, if I'm honest. But there's easy 10% returns on some of them, so they're certainly worth looking at. Stuff like Molten Ventures, Grow, Pantheon that I mentioned right at the beginning, private equity guys. I think that's 11 point something return every year. So yeah, it's worth looking at. But I guess I probably do lean towards the small and mid cap. I've never until this year been a resources person, but I do actually now have quite a bit of gold. Love the idea of uranium as well. Hoping we get some sensible government at some point and we get all our small modular reactors. But yeah, as a general global trend, got a bit of YCA, yellow cake. It's done quite nicely over the last few weeks. Just, if nothing else as well, AI, right? AI is going to need as much power as the entire world currently consumes. So AI alone is going to need that much. And the only way you're going to get that, it's not going to be windmills. It's going to be nuclear power plants. So that one seemed obvious to me. Let's try and think of some other themes. Tech, absolutely avoid it. Just because I think being in the industry, I look at everything that I know and understand with a more cynical viewpoint. And actually, when you're investing, you kind of got to be a bit optimistic. So, yeah, I mean, there's no chance I'd have bought something like Nvidia or whatever, because in my head's telling me, of course, someone else can just come along and fabricate this. Well, they don't even fabricate, right? It all goes to TSMC. But yeah, I do tend to avoid tech.
Is it not the patents though? Is it not? You've got all that intellectual property built within what they're doing.
Yeah.
So having that technology, it means that no one can actually fabricate it, copy it going forward. Same with ARM, they've got all that technology built into all their patents.
Yeah,
So
but at the same time, tanks roll onto the beach on Taiwan tomorrow.
Have you not noticed how much stuff that Europe and America design that ends up in a factory in China being made at 5 pence in the pound?
Of course.
But in theory, it's all IP protected, but
yeah, but we're talking semiconductor chips now, mate. Yeah, AI chips.
Yeah,
so
they nick that. I mean,
I was going to say, to completely backtrack on what I just said, I've got shares in Alphawave, for example. They're in a bid situation, so that's probably what drove that. But again, that's all IP based. They don't create anything. They're just selling licenses to their patents.
Yeah, that's true. Okay, right. So you mentioned gold. What form of gold? Are you in ETFs? So you said you didn't like resources stocks, so you bought the actual miners.
Yeah. So
you've been lacing up your wife's neck with lots of jewellery. What have you been doing, Mrs. T?
Mrs. T? Who's Mrs. T?
Mr.
Oh,
T.
sorry.
From Mr. T.
Sorry, completely missed that. Completely missed it.
You missed that. Sorry, I moved too fast.
Yeah.
Too good for my jokes.
No, as I said, I've always been a bit worried about investing in resources because that's the stuff you see getting ramped everywhere. You can never quite sure what to believe. So when you do actually get someone like, Greatland, I've got a lot of GGP where they are actually producing, they're producing the goods. Yeah. And just trying to think, what's the one that's being ramped all over the place at the minute? And again, apologies to any of your viewers who are holding this.
We'd love to hear about anti-rampless, mate. Go for it.
Yeah, so you've got Greatland with their Telfer and so on mines. There's Wishbone, tiny market cap
Yep.
being talked about. It was up, I don't know, 40% the last few weeks, just because they happen to have a prospective bit of land 17 kilometers from Telfer, right? So they, the guys who ramp are not stupid. They pick a theme. It's not just ramping with no substance whatsoever. They can give people real hope that actually this is so close to GGP, who's now got a £2 billion market cap. So yeah, gone off on a tangent, but yeah, that's why I've always avoided it. But at the minute, to me, along with uranium, gold makes a lot of sense. Trump changes his mind from one day to the next, or says he doesn't, but one way or another we get backtracked and people lose faith in the US dollar. They're going to want more and more gold. So
Agreed. Henry, I'm going to have Henry chime in here now, because he's got a thing about people waving a flag and sticking it in the floor and in the ground and going, we've got gold, and it's like a 10-year project. You're big anti-resources, aren't you? So just say what you got to say, Henry, sitting there grinning. The silent assassin's going to speak. Go on, Henry.
Well, it's all the time. I mean, I had a fascinating conversation with a really nice guy, and he runs an exploration business up in Canada. And he showed me these maps, and he pointed at these dots on these maps, and there were these shaded bits, and he said, well, this bit's at 35 grams per metric whatever, and this one over here, look, we found this rock and it had got a bit of green in it, and that's good. And over here we had some blokes out with some spades, and they found some crystals, and that's going to be good. And all we need is another £1 million, and then we're going to run some more tests, and then someone's going to go and buy this land. And I thought, okay, and what if this green rock is just a green rock and you never find another one? And he just looked at me as though, what do you mean if we don't find another one? Of course we're going to find another one. This place is littered with them. And I thought, it's never that simple. To the best of my knowledge, this guy's still out there, still looking at green rocks and crystals on the floor, and they're still finding things. They're still running tests, and the share price is zigzagging around all over the place. But nothing's coming out the ground. And you think, so am I going to go and give you £100,000 for you to go and pull some more green rocks out of the ground and give me some more bits of paper on that say you found the green rocks? I want the commodities. Like you say, buying something like Greatland Gold, they are a producer. You've got a body of assets in the ground that are coming out of the ground. They can smelt those, they can sell them as gold bullion, or they can sell the ore, and there is a tangible cash flow associated with that. These exploratory companies, to me, I mean, it's just too speculative for my liking. And like you say, it's so easy to read a comment on a bulletin board where, Mr. Big Miner 5000 has just had a conversation with the CEO last week, and don't worry, we're going to find some gold tomorrow, he says. And you think people fall for it because it's that people like to buy hopes and dreams, don't they? Why does anyone buy a lottery ticket? Well, because you might be the one person out of 10 million that actually wins the thing. You're probably not, but it's lovely to have that hope, isn't it? Lovely to sit there in front of the TV and go, maybe this time I'm going to come good. So yeah, I totally agree with you about going for the producers, not the exploratory companies.
yeah, I mean, even amongst producers though, right? So there's one that came across a few months ago, describes themselves as an artisanal miner.
Oh,
And
God.
basically they pan through the dregs, leftovers of other people's tailings, I think they call it. I'm learning all these gold words since investing in
the tailings.
Greatland.
Tailings, yeah.
And they just just had images of literally the CEO and the CFO stood there with little pans shaking through the dirt, and I actually don't think it is far removed from that. I'm not completely off the mark there. It is a very small operation.
I mean, can you imagine if that was us three? We're going to set up the Twin Peaks panning company, right? We're going to go out to an old Rio Tinto mine that's been shut down for 30 years, and we're just going to sift through dirt for hours on end. Hours and hours and hours. Peter's going to stand there with a sack, you're going to stand there with a shovel, and I'll have the pan.
Henry, there's literally numerous channels across various different, media providers of people literally doing that around Canada and various other places. Yeah, some have been dredging the seabed Yeah, lake beds.
And on a small
Gold.
scale, yes. I mean, they're quite fun. Well, there's a guy that goes out, and again, I think it is Canada. He goes gold panning himself. He's just a bloke. He walks out to a river. You can buy an individual claim for like 1,000 Canadian dollars, and it gives you the right to go and, mine this area of land. All they do is go to the river downstream from where a gold mine is situated. They walk into the riverbed and they pan themselves. He's there all day. He might get, I don't know, maybe $50-$60 worth of gold out of this thing a day. And he goes back and he goes back and he goes back. And over the course of a summer, he makes his money back and a small profit. But that's not really scalable, is it? You can't have, 300 people waddling around this river with pots and pans. Maybe you can, I don't know.
You can. Right, let's move on from panning for gold, and let's talk about your good, bad, and very interesting investing and trading journey, Sam. We were just talking about some of the ones where you're going, I wish I'd thought about this a bit sooner, or I wish I'd done something a bit different. Let's talk about the very interesting and bad ones so far. Were you thinking I should have just taken a bit more time? Because everyone on social just wins. So let's just share some of your examples of when you didn't, please, and then we'll talk about some of the ones.
Oh yeah, I mean, I've got friends and work colleagues who've watched me lose a lot of money at a time, to cover in a minute. But I think what put me off, just remembering what put me off resources, was an investment in Chariot Oil and Gas, which must have been 15 years ago at least. Yeah, I don't know if they're still doing the same thing. I know they're still going. I think I've got about 50p's worth of it in a SIP somewhere where it's gone down that much.
Wow.
But yeah, I remember, and I don't want to do all these guys down. You've got to, if you're the CEO of a company, a lot of it is speculative. You've got to sell the dream. But I remember their presentation and it was almost as simple as this. They're going, look, here is Namibia where there's loads of gold, loads of oil, and if you back when it was Pangaea or whatever it was called, when all the continents were merged together, this bit of Brazil lines up with this bit of Namibia. So we're certain that there's oil there as well. And that was basically their story. So obviously that, as I say, that one didn't go anywhere other than down. So that was a terrible one. Did some good and bad trading through COVID.
Yeah, go for it.
So, as I mentioned at the beginning, multiple businesses, one of which is an events business. And for, 18 months or so, it was essentially illegal to run that business. And that was, good 50-60% of my income wasn't getting. So I was like, right, what can I do to get myself out of this? What is going to go up? So I got scraped all my money together that I had spare, stuck it in all the PCR testing companies, and over the course of a few months made a very large amount of money. Didn't sell it though, and so the day the vaccine got announced, as I mentioned, I had two colleagues sat next to me, just watched, like, Sam, you're losing how much money? Like, looking at the screen. So I think I got out with 30-40% of it, which was great, but could have been a hell of a lot more had there been any kind of thought behind it, rather than just a bit of a gung-ho trade. That's just, I'd say that's my downfall. Often the spotting an opportunity is fine, but probably not. What's the word?
Execution.
Capitalising.
Yeah, I don't do the trade planning, that kind of stuff. If I'm honest, I wing it a lot of the time. So
it's building a strategy in place and then having the discipline to stick to that. And
yeah, certainly.
And knowing your exit before you've even entered the trade. A lot of people say you should know your exit before you've entered the trade, don't they?
Yes, yeah. So I mean that I'm much more inclined to do that nowadays. Got a Slack group with about 300 people on it where we chat about our trades and investments. And some of those guys, they will look at, not only will they, scour the RNS for their investment or the trade every morning, and I mean, like, they go into great detail, they discuss it. So by 8, most of them have got a trading plan, what they're doing today. But also at 8:30, these guys also bring up what has moved, and they go, right, why did I miss that? Why did I miss that? There's a lot more introspection than personally I've been used to. So it's really interesting, really healthy to be able to watch these people and how they execute. Yeah.
It's a good educational tool, that. Yeah, definitely.
Yeah, likewise, watching your podcast every week, it's someone with a different investment or trading style, and there's a lot to be learned from seeing how other people do it, no matter how long you've been doing it yourself.
Absolutely. We're still here learning, mate. Most weeks I'm learning from Henry, and he's giving me a punch on the nose going, you silly person. So yeah, we're all going to admit that, the market's just a market of uncertainty. No one actually knows what's going to happen today or tomorrow or next week regarding the markets. But a lot of people want to tell you that they only ever win, they never lose. And I sometimes just follow some accounts to see what they're talking about in January, and I've gone, nah, that's never going to happen. And then by April or May, the share price is down 50%. That person's long gone. He's not talking about it anymore, and he's never admitted that he sold it. But the assumption is that he sold it, and he's already talking about something else, or the group of people. So yeah, you've got to be very, very mindful. Right, Sam, need to talk a bit more about the companies that you have worked with. And more precisely, I met you last year, and then I asked if I could bring a plus one, which happened to be Henry Viola Hare, despite the fact that the bouncer didn't want to let him in, and he was looking dapper.
Yeah.
So tell us about GOPHERCON, what it does, how it does it. You've already mentioned some of the elite companies that you're involved in, and what is it all about? Because I hear coding and writing software, and my heart just sinks, and I go, oh, I haven't got a Scooby-Doo what these guys are doing. But I went there and I was listening, and what code do you write? I'm going, don't write code, mate.
He knows how to change the remotes in his battery, though. Batteries in his remote.
Yes, I can change the battery. Even the car, I can change the battery. So tell us about GOPHERCON, what it's all about, what it does, and the companies involved, mate.
So that's one of the 3 tech events we currently run. We've got a 4th event in the works, which we'll touch on later. But yeah, the 3 tech conferences, they're about specific programming languages. So the silly name GOPHERCON comes from the fact that each one of these languages has got a mascot. So the name of the language is Go because it's made by Google. And then it's got a gopher as their mascot. So globally, these events are called GOPHERCON, Chicago, GOPHERCON UK, and so on. So we run the UK one, and it's brilliant, the kinds of companies you get to come across. We did one in February with for a language called Rust. So it's this kind of up and coming thing. And the CTO of Microsoft Azure, the guy who was, one of the first 3 people, founding team of building Microsoft's cloud platform, rocked up at our event, keynoted for us. He didn't hang around long. He was too important, but limo pulled in.
Sort of
yeah, pretty much. Yeah. Yeah, so we were really fortunate to have him there. We had speakers from Bloomberg, JP Morgan. So yeah, you really get some high caliber companies attending, speaking, sponsoring. Absolutely brilliant for us. It's great to put on an event, but also it's networking for our main business as well. Doing the digital marketing and building websites and doing the sort of data platforms for companies. So yeah, it's a bit of a change of pace as well. I get to take the team for 2-3 days, staying in the city, take them for dinner and drinks, and they get to enjoy the party as well. Yeah.
Did they give you any insight into the quality? You say you don't like tech, essentially, but working in that software space, AI space, and hearing about the codes that they're writing and what the purpose of these codes are, does it give you some insight into the quality of the companies and potentially a little bit of heads up on what's forthcoming in the industry?
Oh yeah, definitely. So using that example again from February, I think they're Dutch, a company called Helsing, and basically they're an AI first defense company. So from memory, I think they raised 300 million. It's a private company, but from memory they raised 300 million last year. So twofold, it's interesting to see how these companies market themselves. So I remember, as a kid, a friend's dad worked for BAE on missile systems, for example, and he was always at pains to describe, it's not a bad thing working for a defense company. You go on Helsing's website, they describe themselves as protecting democracies. So yeah, it's quite interesting to see how some of these guys market themselves. But also, that the big defense contractors, Babcock and the like, are also looking at all these same things. So you get a bit of an idea of, where things are going on the tech side. As I say, whether I'm able to stop being cynical and go, oh, that will never work because it's tech that I semi-understand, Yeah, I'm not sure it helps me that much on the tech side, I'll say.
Any thoughts? Because you are around tech, insurance, broking, there's lots of tech now going more and more into that sort of side of things. Is there anything that you...
There is, and I think Sam's spot on. I mean, the example that jumps out at me was my investment in Darktrace. So I don't work in cyber security at all. So to me, I understand the importance of it. Growing market, cyber attacks growing with frequency, growing with impact, and a huge plethora of technology platforms that help protect against cyber attacks. You've got the analysis, you've got the hardware, you've got the software, you've got endpoint security, network security, virus protection, all sorts of interesting ways of tackling this issue. Darktrace was a company I invested in because I liked the investment story. And then one day I went and I spoke to somebody that works in IT, and Peter was stood next to me, and Peter asked that question I wish he hadn't have asked, which was, oh right, so you work in IT, what do you think of Darktrace? And I thought, oh God, don't ask that because you'll get an honest answer. And of course this guy turns around and goes, oh, whoa, I won't go near them with a barge pole. Absolute, no, disaster of a business, terrible technology, no. And Peter's going, interesting. And did you know Henry owns a bit of this? Oh, thanks for that, Peter. Yeah, really charming that. And this guy goes, oh, so do I. And I said, really? But you just said it's terrible and you'd never invest in it and the technology doesn't work. And, oh, I don't buy it because of that. I buy it because some PE firm will come along and acquire them. And sure enough, 6 months later, a PE firm came along and acquired them. And it was that really opened my eyes to the fact that I'm not saying that you should ignore companies that produce terrible products, because that's generally going to get you burned at some point. But just because somebody in the industry has experience and has a very strong opinion about something doesn't mean that that's the only opinion out there. And sometimes when you work in an industry, you can pick up other people's professional opinions, and they might be based in experience, but they're only based in an experience. They're anecdotal, effectively. And so it's important to be able to take a step back sometimes and look at things from a wider lens. And sometimes it's really hard to do that when you work in the industry.
Yeah, you've just reminded me of one almost very, very similar example, right? So NCC, I've got some at the minute in my portfolio, actually.
I've just sold that.
Years ago, so they do like penetration testing, for example. So we'll build a site for like a Mayfair-based hedge fund. We'll put it on the server, and then they want it pen tested. So I paid NCC, I think, a couple of grand for what I realised was about 5 minutes work. It's an automated test that they ran, and then said, "Yep, here you go. It's secure." Our client's happy. They were paying for it, so it wasn't too bad in that sense. But cynical Sam was saying, well, what a crap business. It's just an automated test and they're charging $2 grand for it. But if you take that step back, you'd go, what a brilliant business. They're making
what
$2
a brilliant
grand for
business.
pressing
It costs them nothing to provide this, and they get $2 grand for it. Wonderful.
So I think that's what I meant by sometimes being too close to the tech. You go, oh, that's rubbish. But actually, it's worked out to be quite a profitable business for them.
Yeah.
And it can also, you can end up looking at things from the wrong angle as well. So it's not. I'm trying to think of a positive way that this works. So obviously the example you've just given me, in theory, someone's getting fleeced of £2,000 for 5 minutes work. They could have paid 50 quid. Not great. Insurance often gets a similar criticism thrown at it, right? Everybody goes out and they buy home contents insurance or medical insurance. They go to claim, they can't get a payment. The most common thing I hear about insurance is it's a complete scam. It screws all the customers over, don't go near it. Actually, it's not true. Without insurance, there's a heck of a lot of industry that just could not function. It insures hundreds of billions of dollars of risk around the world, without which businesses simply would not operate in certain areas. And you're seeing this in California right now. California wildfires, the government has started to put restrictions on the pricing of insurance policies. And the insurance market has gone, fine, we won't insure property in California, we'll just walk away from it. It's uninsured. And what's happened? The value of all the properties collapsed.
Yep.
And so actually this is providing a valuable service, despite the fact that there are many, many instances, and I'm sure we've all got them, where we've gone to buy an insurance policy, we've gone to claim on it, and it's not paid out. And actually the underlying issue there is that the consumer doesn't understand what they're buying and how to use it, not that the product itself is faulty. And yet the way that you most commonly hear it articulated is that insurance doesn't work for the customer, and that's not really the same thing. And again, this is where a little bit of knowledge can be a very dangerous thing when you're looking at investing.
I completely agree on that. Right, we're going to have a little mini break here, Sam. I'm going to talk very, very briefly and thank our lovely global listeners for their continued support with the Menphys fundraise that we do. It's our charity of the year. We're helping support disabled children and their families and their carers with this particular fundraise. We've gone into a particular niche. We're trying to get young people onto the employment ladder. So we're putting together an employability project for young people and young adults later on this year, and we're trying to raise the necessary funds to facilitate that. So that's the fundraise that we're doing. We're currently got an initial target of £5,000 for that, and we've raised so far £1,772, excluding gift aid, ladies and gents. So I want to thank you all for that. We're at 34% of our target. We're in month 5, so we're a little bit behind, but I'm sure you guys and ladies and gents will help make that up for us as we proceed during the year. And if you wish to make a donation, as some of kindly have already done so, please go to the Just Giving page, which is www.justgiving.com/page Peter-Higgins, and that's the Twin Peaks 2025 Just Giving page. Henry, any comments about the Just Giving, what's been going on with that so far? Anything you want to add?
Yeah, only to thank members of the audience that do donate. It's as I say every episode, this is a hugely important charity, and life's getting harder. Costs are going up, and this provides a very, very valuable service for people that do have mental and physical disabilities, quite profound in a lot of cases. And so taking a few minutes of your time to go and visit the Just Giving page, to donate a few pounds, it's a really nice gesture. It's a gesture of support for the work that Peter and I are doing, but more importantly, it's a gesture of support for people that really need it, to be honest. And so thank you to everybody that donates, and thank you to everybody that writes in and feeds back generally, because it is very much appreciated, and we are getting a growing audience here on the Twin Peaks Investing Podcast. So it's lovely to hear from you all, and thank you all for your support.
Thank you very much, Henry. And I agree wholeheartedly with what you just said. We actually had a Menphys gala a week and a bit ago now, Henry, and we had a dignitary that had donated quite a significant amount of money for a different project for us, and we had some volunteers from a real estate company who manned the bar, helped us with the raffle. We had loads of donations for the auction and the raffle, that we did. We had a full house. I think the last time I saw it that packed was when you attended the event I did back in 2022 now, 2021. And we had Steve Thompson there, if you remember rightly, when we had that particular event.
I do, yeah.
Yeah, so we raised nearly £10,000 overall from all the different bits and pieces we did on this particular event, just less than 2 weeks ago now. So yeah, so we'll carry on pushing. We've got to make sure that this particular charity survives and then thrives and then helps disabled young people and their families going forward. Right, back to you, Sam, as you get your glass of water. We need to talk about the next major event and business you're involved in, and what you and a certain other person on this pod and another person on this pod are going to be involved in later this year. So tell us about the Investor Summit. What is it about? Who's involved in it? What can people expect? What's the day going to look like? How are they going to get fed and watered? You name it. I'll just give you a bit of time to just talk all about it, and I'll add one.
All right, okay.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a Twin Peaks investing podcast listener, you can access an exceptional offer, the UK's #1 investment data and analysis software for private investors and traders. This special Twin Peaks offer is available to new subscribers only, and you can subscribe using the promo code TWINPETES. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe today using the Twin Peaks promo code, and you can save up to £69. Visit sharescope.co.uk for further details and subscribe to the investing and trading analysis and data you need.
Yeah, so I guess I've covered these 3 tech events that we run, and really enjoy running those. Really interesting. But my heart is in the trading, investing, and the market stuff. My day-to-day is dealing all day with these fund manager clients and the publicly listed firms that we work with. So I think it was a conversation with you about a year ago. Was it a year ago nearly, Peter? When I said, I'd really love to run one for investors, one that I'm going to sit and enjoy every talk myself. I want to be in the front seat because it's exactly my cup of tea. And of course, there's already events out there, right? So Mello's great if you want to go and listen to individual companies pitch. You've got stuff like Master Investor. You've got some smaller events as well. But there was nothing that quite had the educational side that I was dreaming about, which is, I want to know how companies are going to improve their, relations with retail investors. It does seem to be a bit more of a hot topic recently, but for years it's been neglected. So, I want to understand what companies are doing. I want to, understand what's behind this mention house of called stuff, whether companies are really going to start allocating funds, kind of about how the market works, that kind of stuff. So, yeah, over the last few months, I know we've been discussing some, different ideas, things we could do, and then a couple of months ago we bit the bullet, booked a venue for the middle of August, and I think what have we spent 3-4 weeks, getting some initial, putting it out there, getting some initial interest, and the lineup already, mostly thanks to your good self, Peter, and your industry renown. Yeah, everyone's signing up. So yeah, we've got a great lineup already of speakers, sponsors, supporters, and we're only really launching it this week. So that's been going really great. Very excited for that. Sorry, I'm not waffling too much, I hope. But the other thing I wanted to do is just kind of bring everything up a level, right? So this content is maybe perennial would be the wrong word, but has more longevity, right? So if we can get someone from the London Stock Exchange on stage explaining what their plans are to improve the AIM market, for example, what we do with all our tech conferences is we record this content. So not only does it benefit the few hundred people in the room, but also, you know, thousands and thousands of views. You know, it's good educational content, good market understanding content that we can just stick on YouTube for free, and get it in front of a whole additional audience as well. The other thing I'm going to say about, you know, raising the bar a bit is all our conferences are fully catered. So you turn up at 8 o'clock in the morning, there's breakfast pastries and yogurts and tea and coffee being served, cakes and the like, tea, coffee, juices all day long. We do a 3-course lunch. So it's a little bit different than your average event.
You've just got Emmy's attention. 3-course lunch. And
3-course lunch. I was going to say, I'm there, guys. I'm there. If there's Nuki Brown on tap as well, you've got me. Where do I go? Which direction?
That's the other thing. And why we wanted to do it in the summer. So we run one of our tech conferences in the summer, and it's the most well attended one because there's the after party and the, you know, marquees in the courtyard and free beer and wine on tap. So hopefully we'll be replicating all of that as well. It's a brilliant networking opportunity. I think, as I touched on earlier, you know, I watch this to find out other people's trading and investing styles. So yes, I want to listen to a speaker, but I also want to have a beer with someone and ask them what they're invested in, what's their style of investing, you know, what sectors do they think are hot. So that networking stuff is just as valuable as, you know, the guys speaking on stage. So that will absolutely be a big part of the event as well. Yeah.
Brilliant. No, thank you for that. Yeah. So the Investor Summit, ladies, of which I am part of and I've been working on solidly for a good while now with Sam and some others, will be happening in London. So save the date. We're not going to IPO Henry's Squirrel Limited company on that particular day, but we have, and I'm going to run through this list that that Sam and I have got so far of people that have signed up and are sponsoring this event. The idea that Sam and I had regarding this was to get some of the individuals that ordinarily don't do events of this sort of nature, or smaller. They do marquee conferences. So we're trying to go betwixt a conference sort of ed and a high marquee sort of event. So we've got AJ Bell are going to be involved in this particular event. We've got Justin Urquhart Stewart. Some of you will remember him of Mr. Red Braces, a very knowledgeable global entrepreneur and investor. Charles Hall of Peel Hunt, Simon French of Panmure Liberum. We're going to have Blue Whale Capital there with the fantastic Mr. Stephen Yu. We're going to have the brilliant John Stepek from Bloomberg. We're going to have the AIC, the Association of Investment Companies there. Annabel Brodie Smith and her team will be there. We're going to have Polar Capital and some of their investment trusts. We're going to have Will Fenner from the London Stock Exchange. ShareScope are going to be there as well. And you know what? The Twin Peaks Investing Podcast with Henry Viola Hare and Peter Higgins will be there too. We're going to have Moira O'Neill, FT money columnist there as well. Lord John Lee, the famous and possibly historically the first ISA millionaire. Ray Coyle, CEO of Energize Africa. Lisa Ashford, MBE, CEO of FX. ShareSoc are going to be involved as well, and I'm going to have some authors there. I've not pinned them down as to which ones are going to be there as yet, but we haven't finished the list yet, folks. So the launch is going to happen this week, and hopefully the 14th will be the launch date. We're going to get everything out there into the ether for you all. It's a paid-for event. I must stress this. It's a paid-for event, and the reason why it's a paid-for event is because of the free food. No, I'm joking. It's because of the high caliber of investors that we've got, and also actually to open the doors to this vast building for each person before somebody walks through the door is costing £96 per head, right? We're not going to charge you that, obviously, but there is a cost for this event, and it's £84 per person, plus the cost of if you want to stay on for the VIP session later on and meet all of the VIPs and actually network and speak with them. There's additional cost for that. and you can find all this information on the Investor Summit website, which I'm sure Sam knows by heart what that particular www address is. But it's going to be an absolutely fantastic day, starting from 8 o'clock in the morning, half 8 in the morning, if you want your breakfast, all the way through to finishing the actual event at 5:30, 6 o'clock, before we then go into the after party VIP time to meet all the big wigs and basically get to talk to Henry about squirrels, if that's what your fetish is. You know, you can do that as well.
You've missed a critical piece of information, the pair of you. What day is it? When can I go?
August,
the 13th of August. The 13th of August, ladies and gentlemen.
13th of August, middle of August, is when we're doing it in London at the brewery in London. Sam, what's the
It's right near Liverpool Street Station. It's in the City of London. You couldn't get much more central if you tried, ladies and gentlemen. It's Wednesday, the 13th of August. You have got to be there. This lineup, I've never seen Peter so excited about a lineup in all the years I've known him. He's been calling me up every other night, and he sounds absolutely exhausted after a day on the phones, flicking through his little black book. Henry, you'll never guess who I've spoken to today. You'll never guess. I'm not going to guess, Peter, because you know more people in the city than I've even met. So, you know, you just have to tell me. But this sounds like one of these events that's going to be a must attend. I mean, Sam, you've got terrific experience. That GOPHERCON that I went to with Peter was fantastic. Beautiful venue, wonderful speakers. The food was great, the drink was great, the location was great. And if you enjoy your investing, Sam is absolutely right, ladies and gents. This is a great opportunity to come along and meet other investors just like you. We're not selling you anything other than the price of the ticket, of course, but we're not here to sell companies, we're not here to sell trusts, we're just here to talk about investing, to educate each other, to learn, to share ideas, and to build an understanding of how the market works. How many people have ever met a market maker and understand what happens after you click the buy and sell button? How many people understand what a research analyst actually does at a bank, or a chief economist actually does, or how a Bloomberg terminal works? You know, these are the sorts of questions that you can ask the people that will be in attendance. You know, you don't just have to stand in the corner listening to me rambling about squirrels as I get gradually more drunk on Nuki Brown. There are some serious speakers there. Peter will be there. You can ask him how he's put up with me for all this time on the Twin Peaks. But please recommend it. Please do come along and attend. We'd love to see as many of you here as we can. It was fantastic to see so many at the Master Investor Show. We'd absolutely love to see you at this as well, 13th of August, ladies and gents. We will be shouting loud and proud until then.
Absolutely. Thank you for that, Henry. I think the beauty of what we're trying to do with this event, Sam and I and the rest of the team, is to bring the highest quality of individuals we possibly can via all the different people that we know, to put them all in a room and to just make it so that when people arrive, they've got something throughout the day. You know, potentially going to have 3 tracks of different things going on in 3 different rooms of varying different sizes, so that's something for everybody. And whether it's the morning or the afternoon or towards the end of the day, there's something that of interest for somebody who's got a liking towards investment trusts or thinking or thoughts regarding tech or AI, or, like Henry says, how does the market work? What's going on with these investment trusts? Yeah, what's going on with AI? What's the likelihood of AIM surviving another 20 years given the decline? What's going on so forth? Actually, from the experts that are being quoted in the papers every single week, you know, Charles Hall's being quoted in the paper, Simon French is being quoted in the paper. You know, you've got an interview there with John Stepek talking about various different things, and the London Stock Exchange is constantly in the news. We've got somebody there from London Stock Exchange. You're not going to get these individuals at ordinary ordinary events. You're just not going to have that. So we're just trying our best to raise the bar and do something slightly differently, and we hope to see you there. Sam, website address, please, mate. Send everybody there.
Yeah.
Have a little look.
Investorsummit.co.uk, nice and easy to remember. And there you'll find some of the lineup that Peter's already run through. ticket prices, what to expect in terms of your food and drink. See the venue, how beautiful that is, and yeah, I think it's going to be a good one. Some great feedback so far. I mean, Peter will know this. One of the big things I wanted to do was hold it in the city. I know it's not local to everyone, but you know, all the people who work in the markets tend to be based in the city, because we're targeting, you know, quite, you know, we want you guys watching this, people who are serious about their investing, right?
Absolutely.
And take the time to learn and improve their craft. But that also includes some city professionals. You know, good feedback from people that, you know, they would want actual professionals want to attend as well. So it's going to be a really interesting mix of people for the networking, certainly.
Absolutely. I think one of the beautiful things, I had a conversation with you, Sam, about the importance of education, and we agreed that we would look to seek CPD points, continuing professional development
Yes.
points, for all the professionals that are involved in whatever industry that are allowed to have CPD points. Anyone attending or going into a particular part of the show or the event during the day can be accredited with points for their attendance. So if your company is supporting you to go, or you're paying for a ticket yourself, you can get continuation professional development points as you are attending. So so that's another thing that we're trying to do that will differentiate our event from the others as well. Okie dokie. So thank you for that. I think we're going to have to allow Henry to talk about at least one stock, mate, because he's got one in his mind. He's going to have to make this quick. We've already been running for an hour and 15 minutes. That's the one to avoid, and I'll quickly then share one that I would say to avoid for the time being as well, Henry.
Well, it's hard to do this one justice. I've got a whole raft of notes written up, but will be significantly over time if I go through this lot. I think the point I wanted to make, we're originally, one of the themes we came up with, and we might have to revisit this in a future episode, was when to sell shares and how to know when to sell them. And very briefly, one of the ideas I was going to touch on this evening was the idea of not selling based on price alone, but based on your fundamental thesis breaking down. So this idea that you've not done what Sam did and just read about a name in the paper and gone and put 10 grand on it and hoped for the best, but you've done some analysis.
Not far.
You've gone away and you've got a theory about why you think this thing's going to go up, why it's going to become worth more over a couple of years. If that thesis starts to break down, if this thing is not becoming worth more and more, you probably don't still want to own it, right? So in a position where the share price is going up but the fundamentals are going down, we're talking the revenue declining, we're talking the profit declining, maybe they're issuing more and more shares every year, they're diluting shareholders, so the earnings per share are going down, and yet the share price is going up. To me, this is a prime suspect in your portfolio for just get rid of this thing, because you're probably getting lucky and you're not going to get lucky forever. Now, I don't own this particular company, but I put in a quick screen on SharePad for this, ShareScope even, and I came across Wickes, ticker is WIX, the home improvement retailer that delivers what they describe as choice, convenience and value to customers across the UK, specifically providing goods and services to local trades, design and installation businesses and home DIYers. Now, shares are up from a low of 50 pence in late 2022 to over 200 pence today. So they've four-bagged, despite the fact that over the same period, earnings per share have fallen from 12.5p to 7.5p last year. Net borrowing increased from 591 million to 619 million, and the net asset value fell from 164p to 145. Now, I may be wrong in my analysis of this, and maybe this has got more legs, but in a business that is becoming less and less healthy and the share price is going up, if I owned that and I'd held it from 50p, I would be quite happy to take my profit or take my gains and walk away and consider myself very lucky, because to me that could roll over at any point. Not a healthy business, not one I would want to keep hold of.
Very interesting. Any thoughts, Sam, on Wickes? You know, Have you bought
I
anything
just
for them
tapped it
when
into.
you between you? So go on.
No, I remember it being discussed. I remember it being discussed this morning. So they had results
Oh,
out
okay.
today, didn't they? And yeah, as I'm scanning through here, all I can see, is share buybacks. So you're telling, this is something that's always perplexed me: company racking up more and more debt, but also buying back their own shares.
I think some people call that financial engineering. I'm a little less kind about
Yeah.
it.
Yeah, if you want to get your bonuses, reduce the number of share counts out there, boost the EPS, get you a nice big juicy bonus, don't you? Reduce the liquidity, boost the share price. Nice one, Henry. I'm in agreement with you there, Wickes. Huge competition that they're in, low margins as well from historically regarding that sort of business. And then you've got the likes of what was the last sort of peer company that went under? Oh gosh, Homebase went again, didn't it? Recently as well. So yeah, some might say Homebase go and create some more space for them, but I'm not sure about that. Right, a quick one from me then, and this is one that most people have probably utilised who are not vegetarian. And the weather's been really nice recently as well, and the summer's coming. You'd think that things bode well for this particular company. So very quickly, Cranswick was sitting at an all-time high just at the beginning of this month of £54.60. The 52-week range is £42.03 to 54.60. And on the weekend, there was some sort of discussions and debate about some behaviours which were not pertaining to be good conduct. And then there was a Guardian article basically saying that they fell foul of what they do. And the supermarkets, UK supermarkets, basically suspended supplies from the Lincolnshire pig farm over cruelty claims to little piglets. Share price dropped 10%, and it's currently sitting at about £50.10. £2.68 billion market cap company, forward PE of 18.9, yield of 1.9, and I think for the time being, even though they've got their, was it half year or full year finals on the 20th, which is only a week away, I think until that investigation into what's been going on at that particular farm, where the cruelty was filmed and causing blunt force trauma, I would say that's an avoid. Finals out on the 20th of May, see what they say about that particular investigation. The share price could be unloved for a little while, but we'll see what happens and what sort of redress they come back with. But at the minute, you've got essentially Sainsbury's, Tesco's, Asda, Morrison's all suspended any meats from that particular Lincolnshire farm, and Cranswick are going to be impacted. That's a sort of short that Sam probably would have liked if he'd saw the news the weekend before the actual 10% drop on the share price. But yeah, that's one for me that would be a little bit keep an eye on and see what happens on the 20th. Any thoughts on Cranswick, Sam or Henry, before we go?
Just wondering if they're also affected by the. Wonder if they're affected by the tariffs in any way. I know their business is pretty UK based, but obviously you've got imports and exports of animal feed as well, which is going to be a significant cost in a business like that. But yeah, I can't say I've looked into it a lot.
No, it's not one I know a terrific amount about either. But again, when you've got this bad news, and this comes back to theses breaking down. That's theses with a TH for those hard of hearing, by the way. When you get these theories breaking down, it's a good time to sell. And again, you want to be looking at why you own these businesses. If you take this idea that shares are part of a business that you own, that you've invested in, do you still want to own this business? Yes or no? And when you've got hugely negative news, sometimes it can be a storm in a teacup. These things can blow over. Other times this is a sign, as Warren Buffett says, you never find just one cockroach in the kitchen.
Yes, that's what he said. and that's very, very true. There's probably more to come that could be involved in other farms. That's just one particular farm that's caused that grief for Cranswick, and there could be others as they go to investigate more so. But yeah, that's one I would avoid for now, Cranswick, even though it's historically been a very decent company and rewarded shareholders accordingly. Sam, one last thing. We have to ask our guests this, just in case they've got something positive to say. What is it about the Twin Peaks Investing podcast that leads you to be a regular listener, Sam? Even though you did say you missed the last pod because you've been travelling, we'll forgive you for that.
No, I've missed the last two, actually, if I'm honest. The other 151, I was there, but...
Okie dokie, go for it.
No,
so
it's just... well, first of all, it's a bit more broad, so it's discussions of, yes, some good stocks, some bad stocks, and some sector stuff. But as I said earlier, I just love listening to, the way people trade and invest and hearing their stories. Hearing people's backgrounds, always something to learn. But yeah, and the reason I wanted to work on the event with you, Peter, I think a lot of integrity there. You guys aren't people that talk your own book, and again, very honest about things that don't go so well. There's a lot of people that only tell you what they've bought and how well they're going. There's some people out there have been known to even delete tweets that, trade went the wrong, investment went the wrong way. So, but yeah, you guys are completely above board. So nice to listen, and
we try our best.
Just interview style as well. It's nice and relaxed, and then people open up, of course, and they're more likely to really tell you what they think about a stock. So.
Absolutely. I mean, I think sometimes we're a bit too relaxed, as you've seen and heard with Henry in the past. Sometimes we're a little bit high, and I sit here, but I think the thing is, for me, and the most important thing is about education, but education and investing can be fun. It doesn't have to be boring. Henry and I will go different places and we'll go, oh, what do you do? Oh, that's my full-time job. What do you do for your part-time? You don't say it's football. You don't say it's rugby, you don't say it's cricket, you don't say it's tennis, you don't say it's paddle, and you go, oh, I do investing in my part-time. And people start walking away like you're going to be like a librarian. But it's not boring. It shouldn't be boring. It should be fun. So that's what we're trying to encourage on the pod, is just make it interactive, make it sociable, make it fun, but also we all need to learn more, and be open to the fact we don't know everything. So that's what we're trying to do on the pod. So yeah, thank you for that, very, very much.
No worries.
Henry, any thoughts? Anything you want to say to Sam before he goes? Say something nice.
Of course I'll say something nice. No, thank you very much for joining us, Sam. It's been lovely to have you. Thank you as well for all the hard work you've done so far on the Investor Summit with Peter. It honestly sounds like a spectacular event, and I'm really looking forward to coming along and being a part of that in August. Best of luck with everything out in South Africa. I'm sure it is quite an adventure for you, so I'm looking forward to hearing all about it the next time I see you in person.
Yeah, well, thank you very, very much for having me. It's been an interesting chat. So yeah, cheers. Ticked off something on my bucket list.
Yeah, you're on the show, mate. You're on the show, and we're going to be on your show, so it's all good, mate. So one last shout there as to where everyone can sign up for this fantastic event, Sam. It's www.
It's investorsummit.co.uk.
Okie dokie. Ladies and gents, that is a wrap for podcast 153. Thank you ever so much for listening. We will look forward to hearing your feedback. Let us know what your thoughts were about this particular pod, the bits you enjoyed, the bits you didn't enjoy. Please reshare it, retweet it, like it on YouTube and on the other channels. I need some water. My tongue's like that. And we will see you in 2 weeks' time, which will probably be recording it on the 27th or the 28th of May, which will be the last one of May. And then we branch into June. Any questions, give Henry and I a shout on X or Blue Sky app. And please follow Sam on Twitter /X @ @SamDB. Please follow that account. And obviously, you don't need to follow my account, but please follow Henry's account as well @HTViola on X. We'll see you in 2 weeks. That is a wrap. Over and out. All the very best in South Africa, Sam. Bye-bye. Thank
Cheers. Thanks again.
you. You're welcome.
Twin Peaks Investing Podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage